Today I'm going to show you the strategy that made me my first $100 as a beginner trader. So basically the name of this strategy is known as the top-down analysis. Just as the name suggests, it's the top-down analysis. In other words, we are going to analyze the charts, we are going to analyze the markets starting from the higher time frame all the way down up to the lower time frame. So basically the time frames that we are going to use are the weekly time frame, the daily time frame, the 4-hour time frame, the 2-hour time frame, the 1-hour time frame, the 30-minute time frame, and the 15-minute time frame. Now what you have to know is that all these time frames have different roles. So let's start right away with our strategy known as the top-down analysis. So in the top-down analysis, the strategy has three main steps, three simple steps. Number one, you have to find the trend of the market. Is the market bullish? Is the market bearish? Or is the market ranging? Number two, you have to find the area of interest. Because the market is too big, you have to find a key area where you have to observe, where you have to keep your eye at. And these are namely the support and resistance levels. Then three, you have to find the entry signal. You have to find out the confluences that alert you to know that, okay, let me enter this trade right now. Because you can be having a right setup, but a wrong entry time into the trade can cause you problems. So let's start right away. Number one, we have to first find the trend of the market. Now the trend of the market, we have to use the higher time frames, because the higher time frames are more reliable than the lower time frames. Because the lower time frames, for example the 15-minute, 30-minute time frames, it's hard to find a trend because the markets are so volatile, they are moving at a larger speed. But with these higher time frames, they are more reliable because it takes longer to form those trends. So we start with the weekly. Now I'm analyzing on the Euro USD, which is the most traded forex pair. Now let us pull our tool right here. So when we analyze right from here, you can see that it formed a high, okay, a high, a low, a lower high right there, a lower low right there, a lower high, a low, then it broke through that recent lower high, so the market shifted bullish. So the market is now bullish. So then it dropped again and broke this lower low, the previous lower low. So when it broke this previous lower low, the market has now shifted bearish right here. The market is now bearish. Lower high, lower low, lower high. So we are still in the bearish trend. So to make it bullish, the market has to break this high, and that's what it exactly did. It started forming a high, lower high, a higher high, and you notice it has already broken this previous high. So the market is now bullish, and now it's forming lower low and the lower high. So right now the market is currently forming another lower low to then push to the upside. So now the market at this state is now bullish. Okay, the market is now bullish at this level. So come and type in here. We draw a small text box here. Draw a small text box. So we see that the weekly with the weekly time frame is bullish. The weekly time frame is bullish. I think you can see that the weekly time frame is bullish. Alright, so then we move to the daily time frame. We move to the daily time frame. Yes, so after moving to the daily time frame, this is what we are having. We are having a high, a low, a higher high, a low, a higher high right here. Okay, higher high right here, a low, a higher high, and we're having a low. So you've noticed that this low has broken this previous low. Okay, so if it has broken this previous low, now the market has shifted bearish. The market is now bearish. So to make the market bullish again, it has to break this high, but as of now, this is our highest point. So as of now, the market is bearish for the daily time frame. The market is now bearish. So we come and type in here that the daily is bearish. The daily is bearish, sorry. So after analyzing the weekly, the daily, it will be now time for us to analyze the last time frame. The last time frame for the trend, which is the 4H, the 4-hour time frame. What does the 4-hour time frame mean? The 4-hour time frame means that it takes 4 hours to form a single candle here. So we analyze here. It will be a high, a low. So right now here the market is currently bearish, right? Sorry, the market is currently bearish. Sorry about that. Market is currently bearish. Market is currently bearish. Market is currently bearish, sorry. So it has formed another lower high, low. Then you have noticed that this high has taken out this previous high, right? This high. So the market has now shifted bullish. Then it forms a low, a higher high, a low, a high, and a low. So since this low is lower than this previous high, the market is still bullish. So if the market is still bullish, we can go back here to our and we type in 4H, the 4H time frame. 4H is bullish. Is bullish. So here we are having 3 time frames, of which 2 time frames are telling us that the trend is bullish, and the other time frame is telling us that it's bearish. So we have to take the majority of the time frames, what they're telling us, and since most of the time frames are telling us that the trend is bullish, what we have to do is that we have to look for more of buys, right? We have to look for buying opportunities, not selling opportunities right now. We have to look for buying opportunities. So after identifying the trend on the weekly, the daily, and the 4-hour, we go to the 1 hour. for looking, we look for key levels. Now for key levels, you have to identify the major support and resistance areas. For a level to qualify as a support or resistance area, it has to have 3 touch points. So I'm already seeing a key level here. So this is a key support level for price, as you're seeing right here. It has 1 touch point here, 1 touch point here. The second touch point is here, right here, and then the third touch point is right here. So that qualifies as a key level, right? Or our area of interest. That is a support level. And remember, you have to take buys when price comes back to a support level. Support level. You have to wait for it to retest it, then to bounce off from this key level, the support level, then to bounce off, and then you take your buys. Alright, so after identifying your key level on the 1 hour time frame right there, you go to the 15-minute time frame to take entries. So when you go to the 15-minute time frame to take entries right here, you see that price, okay, as you observe there, price has already reached the key level here, and it's already starting to bounce off from that key level. So this is the perfect entry point to take buys. I think you can see that the bullish candle has already started forming right over here. So you won't rush to take a buy from here. You have to first wait, okay, for price to first bounce off from this area, come back to retest it, and then push to the upside. There you'll be taking your perfect buys off from there. So I hope this tutorial has been helpful to you. Please subscribe to our channel, like our videos, share so that others can learn about forex trading. Yeah, thank you so much.